Hello Oracles! Tesla stock is giving us a second chance at an amazing buying opportunity. Of course, we know that over the past month we have seen the stock come down about 30%. That's pretty significant. We are definitely very oversold, expecting some buying pressure to come back in. As of the time of this recording this morning, we are up 1.75% pre-market. So we'll see if this continues going into earnings that we will be having on Wednesday. Wednesday, we're going to be having a live stream. I'm going to jump on as quickly as I can before the numbers come out. We'll do a live stream then, and then we'll do another one for the recording. I'm going to try to have Brian on here as well from my Tesla weekend to discuss all of these numbers. Now, before we jump into things, I do want to thank Rio. In the comments yesterday, he and Raphael were having an amazing conversation, and he inspired this video this morning. You know, yesterday, if you guys had seen the video, it was the first time I got to do a share screen video, which was great, and I was sharing a chart comparing Apple to where it is now. And the way I was coming across in the video was not as bullish as I had intended. I intended for the meaning of that video to come across as, hey, this is a great opportunity for us right now to be able to buy as many shares as possible, because despite the fact that we may be facing headwinds, despite the fact that we may be facing some PE compression over the next few years, Apple still grew, and Tesla will be growing as well, but Tesla's EPS is actually going to grow faster than Apple's did, which means that the stock price should grow faster as well. And I did not convey that message entirely, and thank you, Rio, for pointing that out, because that was the intention I wanted to share with you guys, at how awesome it's going to be if you compare the charts between Apple and Tesla, and how Tesla will perform even better than Apple did back then. I also wanted to welcome PG Skretting to the membership program here over on Oracle Investments. Thank you so much for becoming a member. If you guys would like to become members, I did our first live stream over the weekend, and I showed how I find all the different levels of support and resistance along the way. So if you guys want to join and become a member, you can do so down in the pinned comment below. And we do finally have some merch, so down in the description you'll see a link to the merch store. This is something I have started up with Jen Strahan over on Twitter, doing a little fundraiser for the families who have been displaced over in Ukraine. So if you guys want to check it out down there, again, all the profits that are made from that will go over to Ukraine. I will be having some other merch coming out for the channel as well in the future, so look forward to that, and you'll get discounts as members also. So looking at the prices of the stock right now, you know, we're seeing the depressed prices, and of course, what happens with depressed prices? It makes depressed investors. You know, we don't want to see the prices coming down, but it's all about the mindset. And for me, when I think about the fact that Warren Buffett always says, be fearful when others are greedy and greedy when others are fearful, right now we are in extreme fear on the greed fear index. We're down at 21 at the moment. That is extremely fearful. That is when you want to be greedy. That's what Warren Buffett says, and that's what I am doing. So when we're in this position, I want to buy. This is the buying opportunity I want to take advantage of. Many of us who are newer investors to Tesla will look back and be like, man, I wish I bought back in during the COVID crash. I wish I bought back in 2017. Well, guess what? This is that opportunity. This is that opportunity that many investors are going to look back at and say, man, I wish we could go back in time and I could invest during these times. Sure, we may come down further. Nobody knows what the future is going to hold. Nobody knows how much further we're going to come down. Nobody knows where the bottom is until we've actually hit the bottom and surpassed it. We probably won't know that we've hit the bottom until 6 months after we have done it. That's the truth. So this, for me, is why I dollar cost average. I explained a few things yesterday in the video, breaking down, you know, when we might see that turnaround coming and when we might see a bottom. But even then, calling a bottom and timing it is nearly impossible. So maybe some people wait until we do truly see that turnaround and then they start buying it at that point, because realistically, it's not bad to wait until then. You know, you're still going to make some great profits. I just don't know when that's going to be, so I will dollar cost average on a daily basis. And my dollar cost averaging on a daily basis reminds me of when I was working out. You know, when you're focused on just the goal itself, whether it's losing weight, putting on muscle, you know, training for an event of some sort, when you're only focusing on that goal, you're most likely going to struggle in attaining that goal. When you focus on the habits that are needed to be done to be able to attain that goal, that is when you will see success. So having the goal in mind, you know, put that picture on the wall, whatever it is that's going to remind you of why you are doing all of these things and these habits on a daily basis. You can put that there, but you've got to put your real effort and focus on those daily habits. For me, that daily habit is my dollar cost averaging and just, you know, following the charts as I do, just to kind of learn more about the market itself. The daily charts truly don't matter when it comes to long-term investing, but for me, I want to educate myself, and it helps teach me to keep my emotions out of it when we do come down to these prices. Because, you know, a couple of years ago, I was an emotional investor. I was in that position where, oh my God, the stock is down this much. What am I going to do? Should I sell? I don't want to lose any more money. And then I learned how the stock market works by paying attention to it on a daily basis. And now I understand that these are great opportunities to buy more versus opportunities that people are scared and want to sell. That's the two different mentalities when it comes down to it, is how much education do they have about the company and how the market works when it comes to the stock market. And that is what is going to determine whether they're going to be successful or they're going to panic sell. And Gabach and I were having a great conversation over in our Discord chat. If you guys want to join us, that link is down in the description, discussing how, why is Tesla pulling down so far when their fundamentals are doing so well? Well, big reason is the macro environment. So what ends up happening to the stock prices, you trade in a range that is based upon where the macro environment is. Right now, the Fed is pulling money out of the economy, which in turn is just bringing everything down. There's less money coming in to be invested, so the levels of everything are coming down. It's not Tesla specific. Look at all of the companies. Every company out there right now is selling off. The entire market is selling off just because that is what is happening and the economy is pulling down. So you are eventually going to trade in a range based upon your fundamentals for whatever the macro environment is going to allow. So right now, the macro environment is only allowing Tesla to trade in the ranges we are in. That's just really all it comes down to. So the fundamentals are strong within that range that the macro allows us to be in, but we need to find that new range as the entire macro environment pulls down and starts to settle. And so looking at some of the fundamentals of the company, looking at Q4 deliveries and production, Troy Teslike came out with his first update for Q4. He's looking at 400,000 vehicles getting delivered and 454,000 vehicles getting produced. So a big question many people are having is that 60,000 vehicles in inventory that are going to be getting carried over into the new year? That seems like a lot. We do have to remember that Tesla does carry over inventory from quarter to quarter, and eventually that does balance itself out. But now that they're trying to smooth out all of these delivery waves, that could end up building up that higher production number and a higher inventory. Then as we get into the new year, when we have the EV tax credits coming out, stuff going over on in China with more tax credits coming out over there as well, that should smooth itself out. So they'll be able to get it out there, and over time that will be fine, and they'll just keep on carrying over that inventory from quarter to quarter, from month to month. And that's good. That's normal. There's nothing wrong with that. It's just a matter of this is how we're going to smooth it out. Between production and delivery, we don't know. Of course, Troy updates every week, so do I, so we'll see how these numbers change over the course of the quarter moving forward. And then, of course, we've got the earnings on Wednesday, where we'll hopefully get some more clarification from Tesla as far as, what the delivery waves look like, what the smoothing out is going to look like, the explanation as to carrying over those 20,000. When is that going to smooth out, and when are we going to thin that inventory down? And now the questions are out for retail investors to ask, so this is great. So I started looking at those this morning. I'll put the link to that in the comments below if you guys want to check it out. And on tonight's video, I'll go through some of those questions that are already up there, and we'll have a discussion about them. And then as the week goes on, sometimes those top questions change, so I'll check on those to see if there's any updates for you guys. And other fundamental news about the company is I was running some numbers based upon, their operating margins and how they've grown over the last couple of years. And despite the headwinds that we had faced in Q2, our operating margins did come down significantly from over 20% to 14.6%. That was a massive hit. But of course, when your most profitable factory is down for over a month, that's going to cause some problems to your profitability. But despite the fact that we pulled down to 14.6% operating margins, those margins were still industry leading. So now we are looking to push ourselves back up. I have them coming in at over 20% operating margins again this quarter, but I don't know. We still did face some headwinds, so perhaps we're only around that 18% operating margins, but I think if we're between 18 and 20% for operating margins for Q3, that will be a huge tailwind for the company. Because when it comes down to it, operating margin is you're getting more dollar per car in your back pocket to be able to spend on future growth in the company as well. So that is why these margins are huge to pay attention to. So when we come to the earnings on Wednesday, my big focuses are going to be just that. It's going to be, where are the vehicle margins at? Where are the operating margins at? We already know what deliveries are looking like. We already know what production looks like. Those numbers get tweaked a little bit. Nothing that's going to be anything major. So looking at margins are going to be key, because that is what is in turn going to determine what our EPS is going to be on the bottom line. And of course, EPS is what is going to determine where the share price moves. Now, of course, there's a lot of other factors that play into whether the stock price is going to move up or down as well. This is why I never play earnings, because you can never predict it. Could come down to, what is the company's forecast looking like? Are they maintaining their 50% guidance year over year? Are they still going to hold true to that despite the fact that they really have some strong headwinds that they're facing going into Q4? So again, those things are also going to factor into the stock price, but baseline of the stock price is going to come off of that EPS number. Right now, analyst expectations are around $1 for a GAAP EPS. My predictions right now are $1.13. So we'll see how close we come to analyst expectations. This time around, for the first time and since I can remember, Tesla actually missed analyst expectations when it came to deliveries. So we'll see if that happens again when it comes to the EPS and other numbers and earnings. But again, we'll find out all about that on Wednesday. And so going back to yesterday's video when we were discussing PE compression and what Tesla might end up coming down to, who knows what number it's going to get compressed down to. During those times after the financial crisis, Apple was actually pulled down to that 10 range when it comes to the PE. But again, as we had seen, their share price still grew significantly over that time, and they didn't have the same kind of growth trajectory that Tesla does. So even if we pull down further in the PE, look for the stock price to continually grow higher because the EPS is going to grow that much faster than Apple's did. And just remember that the bottom of the stock price is not the end. It is just the next beginning of our run going back up again. So when you're looking at the stock and it's coming down, you got to remember that it's not going to come down to zero and go away entirely. It's just going to hit a bottom, regain its footing, and go back up again. That's just what we're waiting for, and that is it. So now looking at that, based upon a $1 EPS, that means that we would pull down to a PE of 51 based upon Friday's closing price. And if we come to the $1.13 that I am predicting, that would bring us to an annualized PE of 45. So 45 is the lowest PE Tesla has ever seen. So that to me just tells me that, we're coming out of what was a, very bull market into what the bear market is right now when it comes to PE compression. So again, how much further we could compress, I don't know, but these are just things I'm looking at. As that company grows and the EPS grows significantly, the stock price is going to move up with that as we grow. And I've also had a question when it comes down to the PE ratio as well and how people figure that out. So it's just price to earnings. So all you really do is you take the current stock price that it is right now and divide it by earnings, the EPS. And the EPS would be, well, a few different ways that people can figure it out. You either take the quarter and you annualize it, so you multiply it by 4, or you could take the forward looking, so you can say, hey, what are my projections between this quarter and the next 3 after that? And then you add all those together and divide it into the stock price, which going by my calculations brings us to a PE of 28 for forward looking. Another way people do it is trailing. So you would take the most current quarter and then go back 3 quarters and come up with that. But for a growth company, you normally don't do a trailing PE just because of the fact that the company is growing so quickly. Those numbers are old data and it's not really going to factor in going forward. And then some others will go out and look and say, hey, based on our 2024 earnings and their EPS in 2024, they will backtrack that and say, well, based upon that and the percentage of growth that we see the company doing over the next few years, we will see a PE ratio of whatever that comes out to be. So there's several different ways of factoring that out. So when you guys are looking at PE ratios, you've just got to take a look at what all these people are looking at. So normally a most general one is an annualized PE. So again, let's say we do come in at the analyst expectations of a $1 EPS. You multiply that by 4, so that's $4. You would take the stock price of $205 and divide it by 4, and that is that. And then you come up with your PE ratio, which again, in this case, as we just discussed, would be a 51. So again, 51 is still the lowest we have ever seen for a PE when it comes to Tesla stock. So now it's just a matter of, building that EPS, because when you build that EPS up, it's going to drive that stock price higher, and there's only so much you can compress a stock price based upon their EPS, because as soon as the EPS grows, it's going to push that PE ratio down, and the stock price will push back up to wherever the PE ratio should be for whatever the numbers are at the moment. So let me know your thoughts in the comments below. Are you taking advantage of these buying opportunities? I know discussing with many of you, you certainly have. And let me know what questions you would like to have asked at the earnings call. Again, we will discuss those tonight, but let me know in the comments below and we can discuss some of your questions as well. And again, just a reminder, if you guys want to buy some of the cool merch that we've got down in the shop below and help support the families of Ukraine, please check it out down there just to see if it's something you guys would be interested in. It's my first time trying the shop, so any feedback would be welcomed as well, because I have not done this before. So this is my first dip into doing the shop down there. So let me know what you guys think about that, and let me know about any other suggestions you guys may have for merch in the future as well. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have that Discord chat. That link is down in the description. And if you'd like to support the channel any further, we do have a Patreon. That link is also in the description. Thank you so much. Have a great one.